story. Another interest rate hike as inflation now reaches record highs.
It is now the second hike from the Federal Reserve in just a few months. It has some nervous for what comes next.
Sasha Loftus joining us in studio tonight with more on what this means for you.
Denise and Brian, this is the latest effort to curb those high inflation rates. But what does it mean if you're buying or selling a house? I spoke with an expert tonight to find out.
Today's the first day we've shown it.
Christopher Haraway is selling his home, and he's optimistic about the future, even as things continue to change.
I've owned a couple of properties in Vegas. I bought them at different times. Vegas is always a good market to be in.
On Wednesday, the Federal Reserve announced another interest rate hike of 3/4 of a point, the second in as many months.
It's calming down for a seller's market, and we have a little bit more inventory.
Don Holf of Exit Realty #1 says these rising numbers are meant to curb inflation, but it can affect what kind of house you're able to buy. A higher interest rate means a bigger monthly payment, which can require more money down.
If somebody qualified for a $500,000 house at a 4% interest rate, let's say, and it went up to 5%, they would lose about $10,000 to $20,000 in buying power.
But Holf says it's all about perspective. Another spike may seem scary, but it's still a lot lower than what we've seen in years past.
And the pug agrees with me.
And Christopher says he'll continue to look forward to all our local market has to offer.
Vegas is going to be fine. That doesn't bother me.
Now, Don said it's important to note these federal interest rate hikes will affect your credit card, student loan, and HELOC payments. They will also raise car loan rates. Denise.